Hello everyone, my name is Kylan Freeman, and on behalf of Team Echo, I will be discussing protecting your business against fraud. Throughout this presentation, I will discuss the definition of fraud, the sources of fraud, a few common types of fraud, as well as some proactive actions businesses can take to protect against fraud. So getting into the definition of business fraud. Business fraud is defined as activities undertaken by an individual or company that are done in a dishonest or illegal manner, and are designed to give an advantage to the perpetrating individual or company. Just to put that into simpler terms, fraud is the inappropriate use of funds, products, equipment, or really any assets belonging to a business. Small businesses also have a higher fraud rate than larger companies. The reason being is that oftentimes smaller businesses lack the oversight or checks and balances that larger companies have. It is also more common for small business owners or managers to become extremely trusting of their employees, contractors, and customers over time. According to the Association of Certified Fraud Examiners, companies with less than 100 employees lose approximately $155,000 as a result of fraud each year. So before we get into the different types of fraud and how to protect against it, it is important to understand the sources of fraud, or who could commit these acts. Fraud can have many different sources, which is why it is oftentimes difficult to catch until it is too late. Fraud can happen with employees, customers, and contractors if you contract work to an outside agency. Also, with the growing number of internet companies and the use of web for business function, cyber attacks have become an increasing problem over the years. Now that you understand the sources of fraud, let's discuss a few types of fraud. Fraud can be any number of things, but for the purposes of this presentation, I'll provide you with 4 of the most common types of fraud that occur within businesses. The first up being embezzlement, also known as larceny, which is the fraudulent appropriation of funds or property entrusted to your care, but actually owned by someone else. A good example of this would be a customer returning a product, and the bookkeeper keeps the product to resell or for his own personal use. Another example would be a bookkeeper using company money for their own personal needs. Next up is internal theft, which is the stealing of company assets by employees. An example of this would be an employee taking home supplies or products that the company sells without paying for them. Third is payoffs and kickbacks. Payoffs and kickbacks are situations in which employees accept cash or other benefits in exchange for access to the company's business, often creating a scenario where the company that the employee works for pays more for the goods or products than necessary. That extra money finds its way into the employee's pocket for helping facilitate the access. A good way to think of this is to think of 2 companies. So let's say we have Company A and Company B. Company A wants to sell its product to Company B. An employee from Company B ensures that the deal goes through. In exchange, Company A sells the product to Company B at a higher price than necessary, and gives that extra cash to the employee of Company B as a way of saying thanks for the contract. Lastly, there's skimming. Skimming occurs when employees take cash off the top of daily sales and officially report a lower total or profit. Now moving on to what you can do to be proactive with protecting against business fraud. You'll notice that there is an overall message with all of these tips, and that is to be proactive and perform checks on a regular basis. There are more ways than what I have listed here to protect against fraud. This is not an all-encompassing list. However, Team Echo selected a few that will give any business a solid foundation to work with. First up, there's using a system of checks and balances to ensure no one person has control over all parts of a financial transaction. For example, you could require purchases, payroll, and disbursements to be authorized by a designated person. Then you could separate handling functions from record-keeping functions. Also, you could separate purchasing functions from payable functions. You should also ensure that the same person isn't authorized to write and sign a check. If your business is too small and you think you can't handle these separate duties, require an independent check of work being done, for example by a board member or any outside independent member. Next is to restrict the use of business credit cards and verify all charges made to the credit cards or accounts to ensure they were business related. You can do this first off by limiting the number of business credit cards and users that have them. You should also establish a policy that credit cards are for business use only. Prohibit the use of cards for personal purposes with subsequent reimbursement. Inform employees of appropriate use of cards and purchases that are not allowed. You should also do this on a regular basis. Require employees to submit itemized original receipts for all their purchases as well. You could also consider providing board of directors oversight of business operations and management. Basically, this allows them to monitor the business's financial activity on a regular basis, comparing actual to budgeted revenues and expenses. If there are any major unrecognized variations, an explanation for the difference should be required. You should also allow them to perform scheduled as well as random audits. You should also ensure that business assets such as vehicles, cell phones, equipment, and other business resources are used only for official business. You should examine reports, credit card charges, and telephone bills periodically to determine whether charges are appropriate and business related. If you have business vehicles, you should maintain vehicle logs. You should list the dates, times, mileage or odometer readings, purpose of the trip, and the name of the employee using the vehicle. Periodically review the logs to determine whether your usage is appropriate and business related. You should also maintain an equipment list and periodically complete an equipment inventory. Next up, and one of the most important tips to consider, is to protect your personal credit cards and bank accounts. Since this is a common area of fraud for everyone, from sole proprietors to employee-based firms, this is one of the most important. Start by separating your personal banking and credit cards from your business accounts. This will ensure fraudulent activity does not impact your personal funds. Separating your accounts will also make it easier to track all business expenses. Also, make sure that you are using your cards wisely. Do not hand over your card or card number to employees or companies with which you do not have familiar working relationship. Next up, and this is going back to the increasing number of cyber attacks, is to secure your IT infrastructure. Every business owner should invest in a firewall as well as antivirus, malware, and spyware detection software. Backing up is also a must and will make it a lot easier for you to continue working in the event a cyber attack does take place. It will also allow you to wipe everything clean without having to start over. Instead, you can pick up just where you left off when the cyber attack occurred. Another good idea is to have a password policy. Make sure your employees change them regularly. Every 60 to 90 days is a good idea. Also set rules that ensure passwords are very complex. They should contain capital letters, numbers, a minimum number of characters, things of that nature. You should also use different passwords for different online and system accounts. Next is to consider using a dedicated computer for all your online financial transactions. This is another added expense, so it's not always an option for every company, but it is a good idea. Ideally, make sure it's one that isn't used for other online activities such as social media, email, and web surfing, which can often open up the machine to vulnerabilities. Avoid mobile banking if you can. Next, you should consider employee background checks. One of the first steps to preventing fraudulent employee behavior is to make sure you are hiring the right person. Basic pre-employment background checks are a good business practice for any employer, especially for those employees who will be handling cash, high-value merchandise, or have access to sensitive customer or financial data. And last, you can insure your business. Fraud and cybercrime does happen. However, you can still seek to cover your damages by purchasing an insurance policy that protects you against any losses that you may incur from crime or fraud. Likewise, find out what your bank is willing to do to help you out in the event that your credit card or business account is compromised. So just to sum things up into a few simple steps, make sure you're being proactive. Fraud is sometimes difficult to catch until it is too late, but by taking action ahead of time, you at least give yourself and your company some type of defense. Make sure you're constantly trending your company's activities. If anything ever looks odd, it should raise a red flag. It doesn't necessarily mean that fraud has occurred, but it never hurts to look into it. This continues into the final bullet of making sure you are performing regular checks. Keeping an eye on your books and numbers on a regular basis is a must. I hope Team Echo has provided you with some valuable information. Thank you for your time.